What if I tell you that India's biggest oil supplier today was almost irrelevant just 5 years ago? Back in 2004, India's oil imports were heavily dominated by Middle East. 20 years later, that basket has transformed into a globally diversified one, with Russia, Iraq, and even the US now a major player. This is not just about who supplies India oil. It is about energy security, trade cost, and inflation. In 2004, India's crude oil imports were almost entirely from West Asia, Saudi Arabia, Iran, Iraq, UAE dominating the share. By 2026, India is importing about 5 million barrels per day, with Russia alone supplying 38%, Iraq around 12%, Saudi Arabia 10%, UAE 8%, and US around 7%. This is textbook shift from single region dependence to a multi-source, globally diversified basket. From an economic lens, this diversification is about risk return trade-off and supply elasticity. By adding Russia, the US, Africa, and Latin America, India has improved import diversification, reducing the impact of any single country shock and improving price discovery competition across suppliers. Lower costs are discounted crude, especially from Russia, also help moderate India's import bill and current account deficit pressure. For India, this means greater energy security but also new dependencies. Cheaper and diversified crude support refinery margin and help in insulate the economy from free-blown oil shock driven inflation. At the same time, India is still import dependent on about 85% of its crude needs. So any global price spike still hit current account deficit, exchange rate, and domestic inflation. So the story since 2004 is simple. India's oil basket is more balanced, but underlying exposure to global oil markets remains sharply elastic in policy and politics.